7:30. All right, welcome back. There's 3 minutes to go for the pre-open session, and we'll have the rates coming up for you in a bit from now. The SGX indicating a 300-point higher start. Anuj is here with how he's seeing markets from here. Anuj, good morning.
Good morning, Prashant. You know what? The Indian trader between 3 and 3:30 has to be the sharpest and the smartest trader on the street, because more or less on most days has figured out the next day's gap up or down. You've seen that continuously. Yesterday also, if you see the intraday chart of the Nifty, let's start with that actually first, because there was a 50-point rally that you saw yesterday intraday on the Nifty. So that clearly indicates that there it is. There was a bit of a preempt. Obviously, nobody could have preempted 300-point gap up. But the market will assume that rates have peaked now. And if you look at the US bond market and the differential between the 2-year and 10-year, it's clearly indicating that. And the Nasdaq led the rally with 7% move. So obviously, there's a bit of a rate-sensitive rally which would be on. IT is now rate sensitive because of the valuation factor. Dollar, bond yield, crude, everything is in your favor. The only thing is Nifty opens right at that congestion zone of that 52-week high. 18,351 is the 52-week high. So that would be a good zone for yesterday's traders to book some profit. Buy on dips has worked, chasing the gap hasn't. So again, my sense is chasing the gap may not work again today. Maybe 18,050, 18,100 if the market is charitable could be a better zone. If you cross 18,400 though, then the door to 18,600, which is the previous all-time high, obviously that opens up. I think the Bank Nifty could be the one to focus on once again, because it opens straight away at all-time high today. And after that, do you chase it after 600-point gap up? My sense is perhaps not a good risk reward, but let's see. HDFC Bank did really well yesterday in the last half an hour. That was a pure expiry play. So maybe today could actually belong to the others like ICICI Bank and State Bank of India. Maybe they could lead the Bank Nifty today.
Okay, Anuj, thanks a lot for that. Have a good one. For now, let's just waiting for the first pre-opening rate to kick in and that big bang opening. But it looks like people are just eating, traveling, attending weddings. I mean, all of these companies, right? Indian Hotels, Zomato, Kalyan Jewellers, all have done really well. Dipan is still with us. Dipan, you were telling us about Zomato, but what about other names? Indian Hotels, Kalyan Jewellers was very optimistic and the stock has done well. Anything you like here?
I think this retail play certainly has more legs over here, and not just Kalyan Jewellers, some other new listings like Metro Brands, Campus Activewear. I think all of these also should do pretty well going ahead. These companies have reported exceptional numbers. They have a large footprint for growth. Balance sheets are strong, and they can grow the store count without actually impacting their balance sheet. So we're very positive on these companies. They are on the expensive side, no doubt, but then retail always has been expensive in India. But with a 3 to 5 year view, I think these companies can be at least 1.5 to 2 times their size and create a lot of value and continue to grow after that as well.
Dipan, what about these diagnostic companies? We had Dr. Lal's who joined in, and they said some of those competition that came in with very, very low pricing, that seems to be easing out a little bit. The street didn't buy it though, because we had Dr. Lal's, you had Metropolis, both of them were lower. Clearly the fear is that increased competition will put pressure on pricing. Your view on this space, it had a big re-rating during COVID, but the best is behind?
See, I think these are great secular businesses, but of course there are headwinds just now in terms of competition, as well as overall, I think base effect also comes into play over here. So in a way, I think investors are better off just being equal to underweight over there. But healthcare as a sector is very interesting, and you should have allocation to that sector. But the best way to play it just now would be to the hospital companies. We heard about Apollo Hospitals, I heard on the show earlier. Narayan Rudralaya also came out with very good set of numbers. And across the board, I think whether it's Max Health or even Shalby, I think all of the hospital companies have come with very good set of numbers and very positive commentary as well. So in my opinion, I think the best way to play healthcare would be to these hospital companies. Valuations are reasonable. And by and large, I think we are going to see higher and higher operational capacity being used. So leverages also will come into play over here.
The rupee is at the bottom of the screen, and it's a very large move, 1.3, 1.35% on the currency, 80.71. And this compares to the close yesterday of 80.8 or so. So that's a strengthening that is welcome. Nilesh of Envision Capital is with us. Nilesh, good morning. Good to have you with us here. It's a very large move overnight. How would you read it? And what does it do really for the market here? Because, I mean, we find ourselves at near highs, whereas the US market was completely bombed out. So how much of the rally we've seen overnight will we carry on here in India over the next few days and few weeks? Your sense?
Yeah, I think it's a great development what we've seen, the rebound in the US markets. India, of course, has been a stark outperformer and outlier in terms of what's happening globally. And in that context, what's happened in the US just provides a massive tailwind for India to basically break out and try and make new highs. So I think that's great. It augurs well for Indian equity, and I see a strong kind of a move ahead. And the outperformance that we've seen for pretty much the entire year, I expect that to continue in the next year as well.
Okay, like someone was saying earlier, right, Nilesh, achhe din aa gaye for the market. I mean, it's a new high you're looking at, and every worry that has been thrown at this market's face has been digested. And how? I mean, we were just talking about how the SIP flows are the highest ever that we've seen in the month of October. So what do you do now? If suppose there's a big up move coming, as an investor, which are the spaces to look at? Do you put your money all in, or do you think that perhaps you'll get better opportunities through the course of the next few months?
No, what it looks like, I think, is that the outperformance that we've seen is expected to continue. It looks like that the next few months are going to be pretty strong. As we step into early Jan, we're going to be having the fresh round of allocations for the new calendar year. Indian bonds are expected to be part of the global indices as well. And in the first quarter, the government itself is targeting for privatization of ITPI, or that's what the media reports suggest. So all in all, I think it seems to be a great time. I don't think timing the market can make sense in such an environment, especially when we've seen so much of our performance and corporate earnings have been strong enough. I think in that context, it makes sense to keep allocating as you have the liquidity. Going forward, I think even in India, inflation is expected to taper off. Rate hikes are going to be probably more modest. So I think on the whole, I think it's a great situation of liquidity, strong macros, and strong micros as well.
Hi, Nilesh. Morning. It's going to be a great morning, actually, for the bulls going by the initial rates that we're having. But Nilesh, I wanted to ask you about the earnings season. You know, we're halfway through this year. This was supposed to be a good follow-up year. Last year, earnings was on a low base. Do you see some bit of risk to the earnings estimates? And how have you broadly, read through this past earnings? Because there have been some big misses that have come in.
So yes, I agree. It's been a bit of a mixed bag. There are some sectors which have been outliers. So financials, especially banking names, they've reported strong numbers. But the manufacturing names, especially areas like pharmaceuticals, chemicals, and some of the other building material companies, they've had some margin pressure, and the volume of take has not been very great. But I sense all of this is likely to ease. We're beginning to see inflationary pressures start to abate. And I think as that happens, probably as we step into Q4, which is the March quarter, you'll probably see some amount of margin improvement. But I don't think that should be a source of worry, because investors are going to take now a look in terms of how FY24 is going to pan out. And I think FY24 should actually be better than what FY23 has been.
Okay, FY24 better than FY23. I just want to make a mention on a few stocks that are moving quite well. By the way, the pre-opening rates have settled now. So it's a 200-point rally that you're seeing on the Nifty, and plenty of stocks that are zooming around at the moment. From the headline index, it is the IT stocks that are coming back. Tech Mahindra, Infosys are all moving up. Apollo Hospitals, Dipan was also referring to that, doing pretty well. And in the broader markets, Fine Organics is one stock which has reported good set of numbers. Samvardhan Motherson Samil is up about 5%, post a good set of numbers. Ashok Leyland is up 3%, post a good set of numbers as well. So Nilesh, you want to leave us with some sectoral ideas? I mean, autos has been a bit patchy. Some spaces have done really well, like commercial vehicles. Can't say the same with two-wheelers. But your thoughts here?
Clearly, auto components, I think, is going to probably outperform the broad auto pack, because in the auto pack, the OEM pack, you're going to see mixed kind of stuff, because some are going to lose market share, some are going to gain market share. And then there are different kind of products or segments which will work and some which may not work to that extent. But what it looks like relatively, auto components looks to be a much better space. We've not seen any major kind of pressures that they could be facing. Demand still continues to be good for them. They're reporting good revenue growth, especially some of the tier 2 auto component names look very good. Defense names are coming out with stellar earnings, and I think that's a great space to be in. Technology services companies surprisingly have kept up in terms of their growth. They've not yet faced any headwinds. Margins have kind of tapered off a bit, but they still continue to be very strong. So I think on the whole from here, I expect tech to kind of shed its underperformance and probably be a market performer for some time and then get back into outperformance mode sometime next year. So I think that's a great place. Valuations have come off out there, so I think it looks compelling. Second is, of course, defense, and third, of course, is auto components. So these three look to be extremely strong kind of pockets in the market.
Nilesh, I recall a couple of months back when you joined and you said it's a good time to start getting into IT, and I think that has played out pretty well, but you're saying that things are still looking good and maybe the stock prices have factored in some bit of the bad news. But Nilesh, today tech is one of the big gainers, and you have the metal index as well that will do well because of the softening of the dollar index. Though there are plenty of headwinds out there, do you continue to remain negative on this? Would you use these kind of bounces to get out of some of these commodity-related stocks?
Yeah, absolutely. I mean, I clearly believe that that commodities, I think we've seen the peak for them. They have kind of, in a way, bounced back from the lows that we saw in the middle of the year, but I think these should be used as opportunities to exit. These are at best trading plays. These are clearly not investment candidates and therefore should not be part of a portfolio. And I clearly believe that we've seen the best in terms of metals going forward. Probably, yes, of course, there's some kind of softness in dollar index, which could trigger some bit of a rally there. But I think on the whole, I don't see a great environment for metals and for other commodities going forward.
All right, Nilesh, thanks a lot for joining in. By the way, the Nifty Bank is all set to have a cracker opening above 42,000 for the first time ever. These are some milestones that our markets are hitting. And the Nifty as well has positioned itself very pretty with a 250-point rally right now, 18,270. Just a matter of time. We keep quibbling about a few points here and there, right? 18,350, 18,200. But give and take everything, these are new highs, and it's something we should celebrate.
I mean, we'll be 1.5% away, Sonia.
Yeah.
So it's just nitpicking, right?
Yeah.
I mean, we're almost there for all practical purposes. But, well, you've got to cross it for us to be able to put that band up to say, well, new highs. The Bank Nifty has already done that. We'll see. But you get this kind of a gap up. What do you do? That becomes the question if you're trading. Mitesh is here to tell us that. Mitesh, you've got the pre-open telling you it's going to be a 1.33% higher start. So just kind of wait for intraday pullbacks or what? Anything new?
See, I think, we open above 18,200 level. So I think, and the Bank Nifty will also give a fresh breakout. I would bet on continuation happening, if not immediately today, maybe, after half an hour of stability. But I think overall, by tomorrow, I think we should see higher level. That's a stronger odds. So I'll go with taking long positions with the gap.
All right, thanks a lot. What about what about the stock idea?
So yeah, HDFC Bank could be a good bet with a stop at 1509 for a first target of 1560.
Okay, let's revisit some big moves now. Ashok Leyland is the one that's having a dream run this morning. Let's not forget, it is already up 25% this year. Very strong numbers coming in, a beat on all parameters for Ashok Leyland. 85% revenue growth, margins have improved, and it's returned to profitability, almost 200 crore profit versus a loss of 83 crores. Now, the market share for Ashok Leyland has also hit 32% right now. Jefferies has a buy with a target price of 180 rupees. They say that the gross margin expansion is something that is looking very good. It's expanded 130 basis points quarter on quarter, and the EBITDA per vehicle that they earn has gone up 47% quarter on quarter. Of course, the tailwind of lower raw material prices could continue in Q3 as well. It's a big move there.
Oh, absolutely. So one of those big names to track now. The big fall in the rupee, the dollar has also taken the pressure off the INR, and we are seeing a very large outsized move right at the word open on the dollar rupee. Lata is here to tell us more. Lata.
Yes, a big rally is seen in the rupee. It is at now 7-week highs. And this is in concert with all Asian currencies, largely because, of course, of the dollar fall. Now, the added advantage for India is that because of the return of risk appetite, one sees more dollar inflows as well from the FPIs. But it's possible that in this leg, the Indian rupee may underperform the Asian currencies like the Korean won. One, because those, underperformed all this while, and therefore there is more reason for them to rally. also they are more dovetailed to the rise in the US economy. And that's why the rupee is also seen as a safe harbor. And therefore, at a time when all currencies are rallying, we may rally a little less. The chances in the immediate run are that exporters will panic because your 83 is nowhere around the corner and they may come in and sell. So a bit of overshoot all the way towards 80 is expected. Where the Reserve Bank comes in is what the market would be most interested. The last time the Reserve Bank bought was at 78.50. So we will have to see when they draw the line in the sand. After all, they will also want to refurbish their reserves. A quick word on bonds as well. 10 basis point fall, and why not? The bond yields in the US have fallen by almost 35 basis points, and therefore a sentimental fall in Indian yields is also expected. So now the bond prices are also at 7-week highs. But here again, there are auctions, and there are auctions coming. Fertilizer deficits are high. So perhaps the rally will be limited, but a rally nevertheless.
Okay, a rally nevertheless. Thanks a lot for that. We're just heading into the market opening in a couple of minutes. Mitesh, I wanted your thoughts on a couple of stocks. KPIT Tech has come back in a big way. TVS Motor has been gaining a lot of ground lately. And Indian Hotels, good set of numbers. Either of these names that you like for a follow-on trade?
I think, Indian Hotels is something which I've been tracking very closely. And unfortunately, I don't have a view on KPIT Tech. So Indian Hotel is something, which went through a good correction, and then, now we are seeing some kind of move starting here again. My sense is that the stock is well placed to possibly get past 345, 350 zone, and once that happens, it will be fresh highs, and the stock should give you a target of around 375, 380. So very positive view over there.
Okay, just about 30 seconds left for the market opening. Ashok Leyland is your big mover in trade right now. And just keep an eye out on the 52-week high for the Nifty, right? Looks like, we could get there through the course of the day. You never know. The 52-week high is 18,351, and we're not even 100 points away from that. So all set for a big bang opening. The Nifty Bank is set to open above that 42,000 mark for the first time ever. Global cues are very positive. The FI flows have dried up a bit, but nevertheless, the momentum has been really strong in this market. So expected to open sharply higher this morning. Brace yourselves for that. Here's the first tick on the index, looking pretty. 250 points higher now on the Nifty, 18,283. Led by Infosys, up 3%, Tech Mahindra up 3%, Wipro up 2.5%, and TCS. So IT is coming back in a big way this morning. HCL Tech as well, up 1.5%. Apollo Hospitals posts its numbers up about 3%, so big move coming in there too. And the Bajaj twins, Bajaj Finance and Finserv, are both up about 2.5%. Gaining steady ground, the Sensex is up over 800 points right now, and the Bank Nifty also charging ahead. Talking about the Bank Nifty, SBI, ICICI Bank, HDFC Bank, all rallying anywhere between 1 to about 2%. There's not a single Nifty stock in the red. That's the kind of momentum that this market is seeing. So 18,261 now, about 100 points away from the 52-week high. But there's so much action in the broader market.
Well, that's right, Sonia. Not a bad day actually for a couple of metal stocks to come out with a disappointing set of numbers. JSPL, the numbers were a little bit disappointing. Well, the standalone EBITDA per ton was disappointing, but that's opened up in the green because of the positive sentiment overnight. SAIL, the numbers were very, very weak. The debt number has moved closer to around 30,000 crores odd, which is disappointing. But that one as well is up closer to around 3%. So these stocks, they're basically ignoring the earnings, factored in a little bit as well, post that recent correction. But today, they're seeing a bit of a relief rally. Other stocks that deserve special mention. In an uptrending market, you have Supriya Life. The numbers were disappointing. That one, in fact, is down close to around 5%. From around 600 rupees, it's come down to around 250 rupees also. Supriya Life is under some pressure. From the frontline names, GNFC and Muthoot Finance, both those two numbers, well, they were disappointing, and both of them are down close to around 3.5% odd. For GNFC, the chemicals division took a bit of a knock, so both of them in an uptrending strong market, both these two F&O losers. On the flip side, you have a few gainers. Fine Organics, well, out there, the numbers look pretty good, so that's flying away. RVNL is opened higher in trade today, so that stock is doing pretty good. Suzlon, well, a bit of a turnaround quarter is what you saw. They've raised some money as well, so Suzlon is higher. Orient Paper, that as well reported a profit in comparison to a loss, so that as well is one of the top volume movers today. And Equitas SFB, well, that's another gaining stock as well. All in all, it's a solid start to trade. We're not yet at around that 18,300 odd mark, as the SGX Nifty suggested, but a good start. Nonetheless, breadth of the market, 10 stocks advancing for one stock declining. Prashant, what more you want?
I mean, absolutely. This is a super start. The Nifty IT index, the two sectors which are doing very well, and I was making this point earlier, is the IT index. I mean, obvious rub-off, right? I mean, the Nasdaq up 7, you got a 2-3% move, absolutely. So 3% on the Nifty IT index. It's the opening highs now. Back at the opening highs, actually higher, and the Nifty Metals index is higher as well, with that big fall that we've seen in the dollar. The regular companion in the gainers list is the PSU Bank space. The PSU Bank index is up 1.7% once again. But it's an all-up day. I'm just highlighting what is doing the most at this point. A few other names in the broader space which are doing very well. I mean, of course, I think we've highlighted Zomato, which is up 7%, 69 in the back of results. Ashok Leyland, Sonia was talking about that, 3.5% higher. You know, this IT bunch, Infi, Tech Mahindra, Wipro, Mindtree, all coming up. LTTS, Persistent, Coforge, all in the range of between 3 and 5%. Even names like Naukri, I mean, InfoEdge, that is about 4% higher. So that is the space you want to watch out for. I mean, actually, I would even go on to say the new age companies, right? New age digital companies, which are unprofitable now with sort of profits in sights. Those are also perhaps going to be a bunch to watch. This is, of course, given the fact that yields in the US have come off a little bit. That was a big pain point for that part of the market as well. Newland Laboratories was up 20% yesterday. It's up another 6% right now. The stock's at about, what, 1791. RVNL, the rail infrastructure name, that is up 5%. There is Birla Soft, which is up 3.5%. eClerx is up 6.5%. I mean, so yeah, IT is coming up as a big winner across the board in terms of trade. So I think we've mentioned most of the gainers led by volumes. Muthoot is a disappointment. I mean, there is not very much happening. Numbers were disappointing, and I think that gold price rebound is not really helping. The fact is, Muthoot had done well recently coming into these set of results, but I think for the third quarter in a row, numbers have been poor and disappointing. Container Corporation, Bata, a bunch of other names which are lower, but overwhelmingly more advances as compared to stocks which are down. Yes.
Okay, look at Zomato, 9% higher now on Zomato, coming back in a big way. And as Mangalam was also telling us, operationally things have definitely improved for Zomato. Of course, it's coming back off a really low base. I mean, it's still down about 50% this year. But folks, are we getting ready for those all-time high T-shirts?
No T-shirts.
I'm not going to jinx it. I'm not going to jinx it this time. So we're not wearing any T-shirts. We're going to celebrate quietly and in a subtle way.
A little bit of noise.
Just one stock I'd like to point out, Policy Bazaar. You know, there is close to around more than 1 crore shares have changed hands. I think we should get the large trade up for you. You know, PB Fintech, that is. The stock should be in focus. If we could get that large trade up, close to around 2.5 to 3% equity has changed hands out there. So I think we should point that out as well. Interesting to see who are the parties, but that's another one that just took place. Yes, we have it flashing for you on the screen right now.
All right. So we'll try and put more details out. Interesting. PB Fintech up about 1.75%. I think, you know, we have visuals of Janet Yellen, the US Treasury Secretary, coming in, and she's making a speech here, by the way, in India. In Noida, and we should be we'll cut across to it. I think there was a tweet from her as well, kind of pointing to the fact that the consumer price inflation numbers have dropped and how the U.S. administration is. I mean, the efforts of the U.S. administration, the government are really working. So that's Janet Yellen, chair of the Fed, and of course now the U.S. Treasury Secretary. A pretty powerful person overall. Well, 267 on the Nifty. We are at, what, 18,297, and this is looking pretty good. Sandeep Bhatia is with us, Head of Equity India and Country Head India, Macquarie Group. Sandeep, great to have you with us here. Thank you very much. Welcome back. You know, the last time you were on the program, you said our big anti-consensus call is long IT. And well, IT it is this morning with a 3% pop, a big rally on the NASDAQ as well. How would you take it from here? Okay, I think we lost the line with Sandeep. We'll try and repatch that and come back. But the move is extending in the IT services space. If you can have these intradays up, you know, so Infi, Techem, HCL Tech, Infi is up 3.5, Techem is up 3.5, HCL Tech is up 3, Mindtree is up 4. There is Persistent, which is up 4.5%. The stock's at about, what, 38, 31. There is Birla Soft, which is up 3.5%, of course, and I mean, it had company-specific issues. eClerx is up 8%. So yeah, it's a pretty broad-based rally. Sandeep is back with us. Sandeep Bhatia of Macquarie Group. Sandeep, good to have you with us here. We lost the line there. The last time you were on the program, your call was, you said it's anti-consensus, but it's long IT and it's working. Is it the start of a very constructive move from here, in your opinion?
I think yes. I think what we have seen in the last week or so is that the worst case outcomes of the Republicans sweeping both the houses in the U.S., continued deadlock, higher inflation in the U.S., all those worst case scenarios have not come to pass. I'm reminded by a quote by British poet Samuel Butler. All animals except humans know that the primary business of life is to enjoy it. I think this is the time to sit back and enjoy what's happening in the markets. But yes, I think IT will continue to outperform. It's value there. It's definitely better than expected outcomes on the US macro, which is helping.
Okay, sometimes we forget to enjoy the simplest things, right? Thank you, Sandeep, for that reminder. Much needed reminder. But overall, I mean, how are you feeling in general about the markets? Do you think that this is the start of perhaps a big wave on the upside? I'm asking because, the global worries are now subsiding a little bit. Indian earnings are picking up in a big way. How are you reading into the internals?
Good question. I think India's big wave has started some time back, and it will continue to gain strength. Two things are helping us. I think the rest of the world will continue to be in a zone of conflict, flux, and uncertainty. That is not going to go away. Hopefully, that does not come to a pass wherein a lot of things go wrong simultaneously, and that hurts India too. And we are definitely going to watch out for that. But right now, I think that wave has started for the last 18 months or so and should continue. More importantly, I think for India, earnings growth held up better than expected than most people thought. I'm not talking about just this quarter. I think the expectations for next 18 months to 24 months is also now seeing more solid outcomes. So yes, we are in the middle of a good wave, which should continue to build from here on.
All right. Hi, Sandeep. I recall when we chatted last, we were talking about 14 to 18% growth, Nifty EPS growth for the next couple of years. Going by what's happened in the past quarter, do you think there's a risk to that? Because there are some cautious tones now coming in there that maybe we don't get that 14, 15% earnings growth. Your take?
I wouldn't be so much in a hurry to come and cut earnings. Yes, there are some cautious undertones. I think a lot of these undertones also is to an extent created by what people hear and what people perceive about the future of the global economy. At least for now, on that count, in the last 24 hours or so, we have had better news. So, my expectation is that even the companies themselves sometimes get surprised by operations. They did get surprised by the strength of the recovery post-March this year, which India saw. I don't think anyone was calling that in November, December in 2021. And that was clearly a positive surprise. Some of the cautious undertones may be founded in business conditions, but is also impacted by what people hear and what people get to hear on media. And to some extent, some of that the worst of that has not come through. So I would not be in a hurry to rush and cut numbers, but I would still say moderate earnings, mid-teens earnings is definitely possible.
Sandeep, although, I was looking at how FY23 Nifty 50 earnings estimates have moved, right? I mean, from a high of expecting almost 16, 17% growth 3 or 4 months back, that number has fallen to around 13%. And I spoke with a couple of head of research at various brokerages. They're saying by the time the year is over, it could be down to 8-9% types. They're yet to put those numbers down, pencil those numbers down in published reports. Is that a risk? How much of that is a risk, Sandeep?
Earnings cut risk in India has been, de rigueur, so it always happens. So I would think that risk is maybe up to a third. That's where it is. Whether it falls down to single digits, then definitely it's not great. I would say maybe 12% is where I would put it, but to put it down to single digits would definitely not be great. Then if we see that kind of earnings cut coming through, then we clearly have, basically we have achieved all the upside we are seeing right now. It may not mean that we see big cuts, but then essentially we seem to drag for a couple of months. Let's wait and see. I think at least the festival seasons went well. Let's see what happens around the Jan-Feb period.
Any sector that you are a bit cautious on now, Sandeep?
I think cautious is mostly on valuations, on consumer. We have always said that earnings seem to be very muted right now for that sector. So that's the consumer staple sector where clearly there's some caution. Longer term, we have to look at what happens in the broader, automobile space with the transition happening to EVs, CAFE norms coming in, and pressures coming through on businesses. So that's clearly something that we need to be aware of. So it would be autos and consumer staples. Autos more in the longer term after 12 to 18 months.
Okay, all right. Sandeep, what about these new age themes? They have gone through a torrid last 1 year or so. Most of them have come off from the top. Now there's plenty of supply that could hit. So if you were a buyer, then you will be spoiled for choice. The question is, would anyone still be looking at these names? Do you think that valuation-wise, they've come to a decent level, or would you completely avoid it?
I think valuations have come to better level than what we saw in the last 12 months, as you just said. But I would still want to avoid these names in the next 6 months. We still need to settle down on interest rates. Interest rates are now expected to peak by March. They were expected to peak after June next year, but they are now. The view is it will be March. I would basically play this in the April to June period. Once we have seen a peak of interest rates, that would be a better time to look at the new age stocks.
Okay, all right, but that would be a better time. Under this umbrella, by the way, I just want to point out that the markets are still holding up in fine shape right now. The Nifty is still above 18,300, so we're just about 50-60 points away from that 52-week high. In terms of stocks, it's once again PSU banks that are making their presence felt. Union Bank, Bank of Baroda, UCO, Indian Bank, all sitting at fresh 52-week highs this morning. So just take note of that. And then you have something like a Bharat Forge, Ramkrishna Forgings doing very well right now, up about 1.5%, fresh highs there as well. In this PSU banking space, I just wanted to understand, Sandeep, has it become a long-term call now? Because for the last decade or so, it hasn't really done much for long-term investors. Of course, it's been a great trading call recently. But what are your thoughts here?
The PSU's basket, whether it's oil companies, whether it's banks or other businesses, to say it's a long-term call is saying that the governance is permanently improved, policy stability is there for despite changes in oil prices or changes in the macro in India. I think that would be a tall task. So these would be names which we would play when things are doing well, and that's exactly what's happening with PSU banks. So in that context, we have always said we like State Bank of India, and the next in line is BOB, Bank of Baroda. And these are the two names for the banking stock. But a long-term structural play, buy and hold and forget. I would not be pushing them as such names. If that happens, a lot would have changed in India. We are not there still.
Okay, all right. Thanks so much, Sandeep, for stopping by, filling us in with your take on a whole host of sectors. IT is something that you called out earlier. You continue to like that. And the other themes as well that we just spoke about. Wishing you a good day ahead and a good weekend as well. Well, Berger Paints, that's the one that we're going to be focusing on next. Remember, the numbers were pretty good, actually. We did see, gross margins. They were a little bit low, but otherwise, the numbers on the whole, they gained some market share as well. And the hope is from here on, the EBITDA number will improve. To understand more about what went on, we have Abhijit Roy, the MD and CEO of the company, who joins us. Hi, Mr. Roy. Morning. Thanks so much for joining in. Well, give us a couple of details then. You said margins will improve in the second half of the year. What kind of improvement are you penciling in? And also volume growth for the past quarter. What was it? And what are you looking at for the year?
So, yes, we are looking forward to an improvement in the margin. That's largely on the back of the raw material price decreases which have been happening in the last 2-3 months, and it remains at those levels as of now. So we expect at least a 2 to 2.2% type of an improvement in gross margin to sales ratio. So that's the type of improvement that we are more or less looking at. As far as the volume growth is concerned, we registered a volume growth of around 11% in Q2 with a value growth of around 22.5 or 23%. So that's as far as the volume and value growth is concerned. Urban demand was better than the rural areas, and we expect that the rural will also pick up now in the second half of the year.
Okay, so this 11-12% volume growth that you spoke about in Q2, do you think it's something that you can sustain in the second half of the year? And I'm also asking because you have some fresh capacity coming on stream. There's about a 35% addition there. What happens post that, and what kind of volume growth do you see?
So, as far as capacity expansion is concerned, we were at about 80-85% of our utility in normal months, and in the seasonal months, it used to go up beyond 100. So we had to set up a capacity there. Whether to do it in a smaller way or in a bigger way, we decided that we'll put up a larger plant. There is greater economies of scale there, and that's the reason why we have picked it up in that way. So 35% addition is a big one, and it will last us for another 2.5 years at least. So that's the reason for that expansion. The second part of it is the volume growth. The first half, obviously had a weaker base, and we were growing at a faster pace. The second part of it, will not have that weaker base, but we will still grow at a reasonable level of volume growth. May not be the way we are positioned currently, because the first quarter we were doing much better because of a very low base. The second quarter we had 11% growth. Third quarter we will be having a reasonable volume growth, and even in the fourth quarter as well. So the second half we will have somewhat normalized volume growth, I would say, in that range of 10% approximately overall. The volume value difference will, however, decrease because last year all the price increases that happened in towards November we had finished off most of it. So therefore the volume value gap will go down substantially. This quarter it was 12%. Next quarter it will be much lesser than that.
Right. Abhijit, hi. Good morning. So just a couple of clarifications. That 2.5 odd percent gross margin improvement this is the guidance for H2 by the end of the year?
That's even in quarter 3 you will see an improvement, but okay. H2 definitely we will look forward to that type of an increase.
And will that flow down into EBITDA at the EBITDA level as well, this improvement?
That should flow through to the EBITDA level as well.
Okay. You said 11% volume growth. What's the split between decorative and industry?
Primarily decorative. We are about 80%, 82% decorative, and the rest is industrial. So the volume growth is mostly in the decorative side.
And what is the gap? Is there any gap now between where your prices are and where prices need to be given input prices? Or you think that gap has been completely bridged?
The gap has been completely bridged. We are on the slightly positive side now, so that's why we didn't take up the price increase in the second quarter, though we were feeling the stress a little bit. And the prices were going down. So, if we had taken it up, then possibly we would have had to drop it now. And that is not a good thing for the market, taking up and pulling it down again and again. So we decided that, we will weather through this second quarter. And in the third quarter, since the raw material prices have softened a bit, that will help us in the gross margin expansion.
Okay, all right. Mr. Roy, your market share has improved a little bit as well. I think close to around 80 basis points odd. Do you see? Right. Do you have a targeted number? Do you get, say, to around 20% market share mark? You have a bit of a smirk on your face. I think you have a target. I don't know whether you're going to tell us that.
No. So we keep on. We have our internal targets, of course, but there's no. It is an endeavor to actually keep growing at a faster pace than the competition. That's what we should be doing, and there is enormous gap that exists, and there is an advantage for us in terms of distribution network expansion, which we are working on very seriously. This year we have jacked up that number quite a lot, and we expect therefore that the advantage will accrue in the second half and also going forward next year.
Okay. What about your investments in terms of marketing, branding? Considering that there's so much competition now, will it go up as a percentage of sales?
As of now, there is nothing. So, we are the same bunch of people, competing in the same space, So, I think we will have to await that, But yes, we continue to spend on our marketing budget as much as is required. If there are new launches which we are very excited about, then we will up our spend. Otherwise, normal spend levels goes on.
All right, we will leave it at that. All the best, and thanks a lot for joining in, Mr. Roy. Have a good weekend. That's the word coming in from Berger Paints, but don't lose sight of the market. The Nifty now at 18,314 is very close to its 52-week high of 18,351. I mean, it's just a matter of time before we get there. And big moves coming in Apollo Hospital. So we'll do that. On the other side, we'll be joined by the managements of Apollo Hospitals and Samvardhan Motherson. Both companies did very well this quarter, and both managements lined up in a bit. Stay tuned.
Co-powered by